You can always edit it. You can always order it. Or you can always edit it. I mean, sorry.
Yeah,
Okay.
exactly. You can always edit this part out.
Awesome. Can
It's
let
nice to meet you, Emeka. How long you been
It's
on the
a pleasure.
Natasha team?
It's been what, 3 weeks now?
I've been
Woo,
working.
3 weeks.
Yeah, I'm a newbie.
Yeah, she helped me at an event and she's been helping me ever since
Yes.
trying to get it together. I know Sherry's like, yes, we've been trying to get this renovation Zooms going so we can pick up the get some information out there. Information
Mhm.
equals contracts.
Right. All right, perfect. So we are recording. Everyone is a host. Perfect. Just making sure. Okay, cool.
I wish I could move it to my other screen, but I
And
never.
so we're aiming to end no later than 12, right?
Right.
Okay, perfect.
Because I just don't want them to start logging off before they can ask questions. We're gonna have some people probably coming at the end. Um,
Hmm.
I do a lot of Zooms that I never make, so um, you book them, but then you gotta remember to go to them.
Right.
Yeah, and then you log in late and things like that. But that's why we'll have the recorded option for individuals.
Yay. I'm excited. Did you want like music playing or anything when people come in? Like elevator music?
If it's up to you, if you like, I don't know.
Okay.
Cherry, do we want
Maybe.
elevator music? Have you had?
Not elevator music. Let's do something decent.
Let's drop those mics.
Okay, let's see. Maybe like I'm not the music person. Let me see. Jazzy, upbeat,
Classic rock.
classic rock. Okay, thank you.
Joe and my generation.
Like instrumental, I think, because I don't want to risk.
I mean, you're going to have it low, right?
Yes, ma'am. Let's see. Oh, that's slow. You guys hear that?
Mm-mm. I don't hear
No.
it.
You hear it?
Nope.
And then you have this pop-up screen as well, Emeka, that there's people in the waiting room. You'll let them in as we go forward.
Yes, that's correct.
All right.
You guys hear this?
Yeah, you got an echo now.
Mm.
We might have to practice the music another time.
Yeah, I call it.
Yeah, because now you have an echo.
I should be good now.
You are.
Okay, cool.
Can you see this pop-up screen right in the middle of the screen? Can you see this moving around? No?
No. All right. Well, it's about that time, so I'm gonna go ahead and start letting people in. You guys ready?
We are ready.
All right, sounds good.
Good morning. Welcome, everyone. Come on in. Welcome, everyone. We're going to give everyone a few minutes and then we'll be beginning the presentation on time. But welcome to my virtual renovation loan conversation, where we are going to be talking about the renovation loan process and how you can use it to grow your business, how you can utilize this program to purchase homes and gain equity and utilize renovation loans to do that. So we will be with you soon. Hello, Patricia. Hello, Sandra Edwards Martin. T. Kelly.
Hello.
Hi, beautiful. Edra Cannon.
You can't see it. No, I have it covered. No. I'm trying to see who's it by, who's giving it. It's a rich.
So everyone, it is 11:03. Your time is important. So we are going to get started. Welcome to our virtual renovation loan conversation. And it is going to be a conversation. So we have our renovation leader, Joe Daly, here today. We have Sherry Tedesco on my team as well today. And we are going to be dropping some gems on renovation loans. Yes, renovation loans are happening and we are closing on time, and you are able to utilize these loans to grow your business, to purchase a home, to gain equity, and to do many, 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 many things. So today we're going to give you some of that information. We have a lot of changes in the industry, such as loan amounts increasing, loan limits increasing in Cook County. You can actually purchase a 4-unit, go to 1.3 million with purchase price and construction and loan amount, and only put 5% down. So there is a lot of options today that will give you the opportunity to become a person that can gain equity through renovation. Yes, in most of our programs, you do have to live in the property, but today, right now, I am going to introduce to you my renovation leader, Mr. Joe Daly, that is going to come on board and tell you everything about our program, what we've done at Guaranteed Rate Affinity, and how you can take advantage.
Thank you, Natasha. Thanks for having me today. I appreciate it. Well, we're excited today to present to you the world of renovation lending. And I think we all know about HGTV. My gosh, I think there's like 40 or 50 different programs that HGTV has to show people how to buy and renovate or fix and flip and Property Brothers and Chip and Joanna. I mean, they're all over the place. And this is so close to you, whether you're a consumer or you're a realtor in today's market, a buyer's agent, a listing agent. Renovation lending is really alive and well, and Natasha is, you know, our top originator in all of guaranteed rate affinity. So she wanted to bring this education piece to you on how you use renovation to grow your business. And we're going to go through all the slides and educate you. And then after the slides are done, we're going to take questions. You can go ahead and put your questions in the chat box. We'll check those as we go through the presentation, or you can jot them down and we'll take those at the end. We've got 5 different products to share with you today, and that's the exciting part, all right, in the fact that a lot of products for different people, different down payment, different credit scenarios, and we wanted to share those with you. As Natasha introduced me, Joseph Daly, National Director of Renovation Lending, and this is my 40th year in the business. The first 8 years, starting in 1983 as a realtor full-time, and the last 30 years, 32 years, all in renovation lending. It's been kind of my baby. I cut my teeth on the FHA 203K, but learned to love VA Reno and certainly our conventional renovation programs as well. So we'll go through the slides, and these slides are available to you through Natasha's team. So if you like the slides, you want them to be shared with you, feel free to give Natasha or her team a call, and we'll get you a copy of the PowerPoint presentation. So what is a renovation loan? A renovation loan gives the buyer the ability to buy a home, close in as-is condition, but borrow the additional monies they need for the purchase and the renovation dollars. Let's build an example for today. So let's say you're going to buy a home for $350,000, and let's say your client or yourself are going to renovate it for $50,000. $350 to buy it, $50 to renovate it. We're going to add those two together, and then we're going to give the loan based on that. So whether it's a 3.5% down payment using FHA, or 5% down on a 1, 2, 3, or 4 unit owner-occupied building, then we borrow the difference in a first mortgage. So we're talking about just one loan, right? 2 needs, 1 loan. The ability to buy a home and renovate it with one single loan and one single loan closing. What makes it really different is the appraisal. So we're going to do the appraisal once we have those bids from the contractor. And Natasha's team's great at this. They handhold your buyers, right? Yourselves, you know, the consumer, all the way through the process. And Natasha's team helps the buyer find a contractor, locate a contractor, and then we have to validate that contractor. Once the contract is validated, we have the bids, we're going to order the appraisal. And that's what makes it great, because the appraiser needs to see the renovations, the upgrades, the improvements, because he's going to appraise it something uniquely different. And that is what's called a subject to appraisal, meaning what's the home worth when all the renovations are completed in today's market using sold comparables in the area. So there again, it's one transaction, 2 needs, the money to buy the home, the money to renovate it in one simple transaction. We do the appraisal a little different, and we close an as-is condition. So if you're a realtor today joining us, you get paid when the loan closes, and no renovations are done until after closing. And Natasha's team, as well as Guaranteed Rates team, we're going to escort that buyer through the process, holding their hand up until the time the renovations are all done. So this can be a 4, 5, 6, 7, 8 month process, and we're there every step of the way. Let's talk about the products. We have an FHA 203K product. There's multiple products, the standard and the limited. And that 203K product is for your FHA buyers, buyers that maybe have higher debt to income ratios, maybe have a smaller down payment, maybe have bruised credit or past history of a bankruptcy or foreclosure. But also we have conventional home style and choice renovation loans. These are for your conventional buyers. So same kind of loan, same process, just different financing for different types of borrowers. And what about our veterans? We love our veterans, don't we? Hey, if you were honorably discharged and have a DD 214 and have a certificate of eligibility, you can buy a home and renovate it in one single loan transaction with, are you ready? Zero money down. Can you believe it? Buy the house, borrow the money to renovate it with zero money down, as long as a veteran qualifies. So we're going to talk about all these programs and go a little bit deeper why we have you here today. In today's market, finding the perfect home can be a challenge, can it? So our renovation loans let the home buyers expand their options by including housing stock that may not fit all their needs. I think as a past realtor myself, I would ask the buyer, what do you want in a home? What do you want in a home, right? And they're like, I want this, and I want this, and I want this, and it's what, and oh my gosh, you want it all. But what happens is that we're selling housing stock that's 40, 50, 60, 70, and 80 years old, and it doesn't have those amenities. And that's what's great about a renovation loan. The ability to take the house you like and make it the home you love by borrowing the money at about $7 a thousand. That's right. Did you know that? Even at 7.5%, you're borrowing money at like $7 per thousand. That's just a round number, right? So your buyer could borrow $30,000 for about $200 a month, right? I mean, who else, who here would want to borrow $30,000 right now for $200 a month? All of us, right? But in a mortgage, because it's amortized over 360 months or 30 years, your buyer can borrow money based on after improved value at about $7 a thousand. Fixing up a fixer upper is one of the best strategies for gaining instant equity, right? Homes that need renovation sell below market value, don't they? Right? When they're not, great and they have issues with the property, they sell below market value because of the wear and tear on the property. And someone can buy a house wholesale, let's say 70 cents on the dollar, but then just borrow 20 cents on the dollar to renovate it and end up with 10% of equity. Do you see that? And that's really the benefit of renovation loans. Buy wholesale, renovate to make them worth retail, and not only gain your equity position as your down payment, but also additional down payment based on local comparables in the area. What other homes have sold for that were in great condition. Can we mute those other callers maybe? I don't know if you can mute those other callers. We're getting some background music, so that'd be great if you can do that for us, Amika. What are the steps to a perfect renovation loan? Number one, get pre-approved. Natasha's team is ready for you to get your buyers or yourself approved for a mortgage. And a renovation pre-approval is different than a regular pre-approval because we have to build in those renovation funds. So if you did want to buy a home for $350 and put 50 in it, I got to pre-approve you for a $400,000 all-in budget, right? Chip and Joanna talk about all-in budget, right? What are you going to buy it for? What are you going to renovate it for? That's what they call their all-in budget. So once you know your all-in budget, let's say that you get qualified for $500,000 as an example, you can go out and buy maybe something for 400 and put 100,000 in it. Or you can buy something for 200 and put 300,000 in it. So different programs, different products, and we're here to help you buy that home, renovate it, and fix it up. Once you're pre-approved, the buyer can find the property via their real estate agent, right? This is where you come into play for those of you who are calling in who are agents. Once you find the property, write the offer. Once you write the offer, Natasha's team will take over and they'll introduce you to a local HUD consultant who's going to tell you what the property needs in order to bring the house up to FHA's minimal standards and what an adequate budget would be for that borrower to renovate that home. Now, don't forget, renovation loans allow your buyer to borrow money for required items and desired items. So you may have to have new wiring because the house has old knob and tube, but just because it has pink toilets and blue refrigerators doesn't mean the buyer can't get new as well. So don't forget, required items can be financed into the loan as well as desired items. Once we have the HUD consultant go through the property or a third party, we get an idea what those repairs will be. We have the contractor give us a bid, and then we order the appraisal. After the appraisal comes in, we send it to underwriting, and it's married to the credit piece of the file. So when the property piece and the credit side is married together, the loan's approved and then cleared to close. Remember, no renovation until after closing. So we're going to go to closing in as is condition. You realtors can come in and, earn your commission, pick up your check, and then renovation begins. And that's where a great lender like Guaranteed Rate comes into play, because we're going to hold the hand of the borrower all the way through the process to closing, but then also after closing. And all we require that the work be done within the program requirements, and that we do a final inspection at the end to make sure that all the work was done for the money that was borrowed. The 203K program is a great product, right? And we're going to go over these briefly because we only have so much time, but there is the FHA 203K program. And in Cook County, what's important to know is that look at your loan limits, right? How many homes in Cook County can you buy a single family residence under $500,000? As I told you, this is my 40th year in the business. I was a licensed realtor in 1983. If you told me in 1983 that you could buy a $500,000 home with 3.5% down, I would never believe you. But believe it today, right? Because you could buy a house for $400,000 and put $500,000 in it and only have a 3.5% down payment using FHA financing in the Cook County market. And what about multifamilies? Remember, FHA loans are what? That's right, owner-occupied purchases, right? So when your buyer is purchasing an owner-occupied where they're going to live as their primary residence, they can buy a 1-family, a 2-family, a 3-family, and a 4-family. And you know what Natasha's going to do with those rental income, right? She's going to let the borrower use those to qualify for a larger mortgage. 2-families are bigger than 2-families are bigger than 1-families, and 3-families are bigger than 2-families, and 4-families are bigger than 3-families. And that's why those loan amounts are even higher. So you could buy a $500,000, 4-family in Chicago and borrow another $500,000 to renovate it with still a 3.5% down payment. Almost unheard of. So know that you can buy multifamilies and 1 to 4 families, and also with a 3.5% down payment. If you're not talking about multifamilies right now, you should be talking about multifamilies when you're meeting with your customers and working on getting them pre-approved with Guaranteed Rate affinity. Let's take a quiz. What percentage of Chicago's housing stock is greater than 20 years of age, right? What do you think? What of all the housing stock that you guys have, right? Think of the housing stock and how old it is, right? Let's take a look. 89%. 89% of all of Chicago's housing stock, this is the MSA of Chicago, is greater than 24 years of age. And you can see the amount of housing that was built before 1939. You guys have the huge responsibility of selling older homes. With older homes comes the need for energy efficient items, as well as code enforcements or code updates, as well as just decorating and renovating and updating. So you guys have older housing stock, something you guys need to recognize, but know that there's renovation dollars out there within a renovation loan. Home sizes. As statisticals from a website that I use, which is called neighborhoodscout.com, neighborhoodscout.com, allows you to explore different neighborhoods, different cities, and it gives you demographics, which I'm using here today. Did you know that only 26% of Chicago's housing stock has 3 bedrooms? Well, that would make sense. That's why it's hard to find 3-bedroom homes in Chicago. And that's all housing stock, not just the ones you can find on MLS. So 35% of your housing stock are 2 bedrooms. Guess what Natasha and her team have? That's right, money for bedrooms. Did you know you could add on to a property using renovation loans? Did you know you could change a lower level and finish it out? Do you know you could add a dormer and add bedrooms or bathrooms to a second story level that maybe is not being occupied right now. You can even tear a house down and rebuild it with a renovation FHA 203K standard loan. So open up your mind, think outside the box and utilize renovation to sell more homes. And if you wanted to buy a 5-bedroom home in Chicago, good luck, because only 3.5% of all homes have 5 bedrooms. But there again, Natasha's got money for bedrooms and bathrooms. 80% of Chicago's housing stock is valued under the FHA loan limit. So you can see all the different price ranges of all the homes that are valued in Chicago. A lot of them between 123 and 246, 246 and 369, 369 and 492. Now, I know there's other neighborhoods, right? And I know the Gold Coast and I know Naperville, but we're talking about the MSA of Chicago. But even for that, Natasha has loans approaching $1 million for a lot of different housing stock. So look to Natasha and her team for help in renovation loans. The first program that we talked about is the standard and the limited 203K. It just depends on how much money you need for renovation. One is for a lot of repairs. The other is for limited amount of repairs. What kind of properties can you buy? 1 to 4 families, FHA approved condos if they're available, and mixed use properties. What's a mixed use property, right? A mixed use property would be something there real quick that would be commercial on the first floor and then residential above it. So maybe you have a 3-story building where someone has a barber shop or a grocery store, and above it is residential living area. You can use renovation dollars, right, to renovate that residential space, whether it's owner occupied or it's owner occupied with a rental unit. So you could have up to a 5-story building where you have 4 families. One is the owner occupant, the other 3 are renters, and still have a storefront, all using the FHA 203K program. 3.5% down payment based on the total acquisition cost, and that's the sale price and the renovations added together, but also credit score as low as 580, right? So we don't have any overlays on our FHA products. Energy efficiency. You should know that you could go out and borrow monies to make homes better and more energy efficient. Older housing stock, the need is so great. More insulation, duct sealing, whole house sealing, new doors, new windows, insulated doors, insulated windows, HVAC systems, water heaters, even renewable energy allowed to be rolled into what we call an energy efficient mortgage, and that they can be stacked together with a 203K loan. Can you refinance and remodel? I like to throw this in as kind of a shocker, right? We're talking about purchasing and refinancing, but as realtors, you should know that people can also refinance their home and renovate for maybe some past buyers that you've had before. So imagine someone living in a home 4, 5, 6 years, and they're wanting to add a bedroom or add a bath. They love the neighborhood and the school system, but they don't have extra monies for renovations or a new roof. Here you can use the after improved value to borrow money, pay off that first mortgage, borrow the money to renovate when you're refinancing. So I definitely want to make sure I got that slide in there. What's structural? Yeah, some homes have structural issues, and we can take care of those with the standard 203K. Posts, beams, columns, new header boards. We've all seen it on HGTV where they want to have the open floor plan. They want to knock a wall out, put in a header board. That's a structural repair or improvement. So those are certainly allowed on the standard 203K. That limited 203K is limited to those repairs under $35,000 that don't contain any structural repairs. Imagine the benefit of adding a garage, right? Adding an ADU unit, accessory dwelling unit. And you can do that with FHA or our conventional products. Finish a lower level, finish a basement, even add a second story to a home, add a bedroom, add a bath. Really unlimited in the world of renovation lending. Within the PowerPoint, there's a lot of eligible repairs, ineligible repairs. I'm not going to review those today, but they are in the PowerPoint. So take a look at the PowerPoint and then also get with Natasha's team with questions or more information as it relates to a scenario or a borrower that might be with you. The limited K, the benefits of a limited 203K, the number one reason we like to use that when there's no structural repairs and the repairs are under 35,000 is that we're able to share 50% of the renovation funds with the contractor about a week, week and a half, 2 weeks after closing. So here's for your smaller, maybe job to job type contractors who need seed money to get started. Let's say it's a roofer. All we're doing is renovating a home. We're going to renovate the home by putting a new roof on. A new roof might be, $14,000. Well, they would get $7,000 up front to go out and purchase those materials, the shingles, the felt pad, the nails, and etc. And that way they're not out money or running up a big line of credit, right? So lots of different programs for the right situations and a variety of situations for different types of borrowers. Purchase agreements. You're like, Joe, this sounds great, but how do I write an offer on a home that needs renovation? Just like you're doing right now. You're already negotiating as is value, and you're still negotiating as is value on a renovation purchase. All we need is a paragraph or an addendum that says the buyer chooses renovation financing. And Natasha's team has special financing for FHA loans, has the verbiage that we need for conventional loans. And we might need a little extra time to close a renovation loan because don't forget, got to do the inspections, got to find a consultant or a contractor or both. And then we got to get those bids before we order the appraisal. That's FHA. FHA, 1 to 4 families, mixed use properties, some condos, if their condos are approved by FHA. And so we already have a lot of opportunities for FHA buyers to buy and renovate. What about Homestyle? Homestyle is another product. This is for our conventional buyers with loan limits up to $766,550 for single family and even higher for multifamilies. And what Natasha talked about at the beginning of the class was the fact that Homestyle, which is a Fannie Mae product, allows a 5% down payment now, even if it's a multifamily. So exciting, right? I've been in the business a long, long time. I've always had to ask my 3 and 4 unit buyers to put 20 to 25% down. Again, that's for our owner occupied 1 to 4 families, minimum 5% down. There's also other types of housing we haven't talked about yet today. One is second homes, the red arrow. We do allow financing for second homes for a lot of those Chicagoans that actually go north to maybe Wisconsin, and they buy those summer homes. But those summer homes were built in the 40s and 50s. By gosh, they need a little facelift, a little Botox. So Natasha's team can lend that money to them, roll those monies into the new mortgage with what? That's right, 10% down. And then investment property. We haven't talked about that yet because FHA does not allow investment properties, but the Homestyle renovation loan does. And for a minimum of 15% down, can be a little expensive, 20 or 25% down is preferred and has the best rates and the best terms. But here's allow a non-owner occupant, someone who wants to buy their first rental property, to put 20 or 25% down. But the benefit, borrowing the money for renovations. Allow that tenant to pay for those renovations over the life of the loan while they're living there by increasing their rent for the renovations that someone would do by buying a home and renovating it as a single family investment. There again, only type of investment property we have is for our conventional buyers, and it must be a single family unit. We did talk about second homes and investor properties. We know about that, just reiterating that. And then we have another product, which is choice renovation. This choice renovation has higher down payments, but the terms can be different. And there are also some added benefits, like if a borrower has like school debt or they're self-employed. So different rules for different type of buyers. Natasha's team is great. making sure that they pick the best renovation product for your client. Next client, hello, Mr. Veteran. Thanks for serving our country. We love you. And you're an eligible VA buyer. And now you can actually buy and fix up a house with no money down, financing 100% of the purchase price plus the improvements. And we do limit the repairs to $50,000, and the work has to be done within 4 months. So there are some guidelines around that, but remember, the veteran puts zero money down, borrow the money to buy it, borrow the money to renovate it, zero money down. And those loan limits also $766,550 if the veteran qualifies. Properties for VA, 1s and 2 units, now allowed 3 and 4 units as long as they're owner occupied. So this is a change since the slide was published. So we can do veterans 1s and 2s and 3s and 4 units, long as they're owner occupied, including condos. So look, here's our summary sheet of what we already done today. I know I went really fast, but I wanted to give you all the information in our 30-minute session. And we know, now you know that we have the standard 203K, the limited 203K, the home style, the VA renovation, the Freddie Mac choice. And these are parameters in and around those products for you to know our products even better. But certainly we're only a phone call away to you and or your clients. So imagine the possibilities. This is a project that I was involved in, and you can see we basically took off the dormer and the roof line, and we added a second story. We took an 810 square foot house, we made it a 1,710 square foot house, adding 3 bedrooms and another bath and a half. So we're actually reinventing, we're actually creating our own inventory, our own housing inventory. If you've shown every 3 bedroom to your customer in the neighborhood, maybe step down to a 2 bedroom and offer the vision of renovation financing. That's how you sell more homes in America today. You know the steps of the renovation loan, and I think after today you can pursue listings that need renovation. You're able to talk to your buyers about renovation financing, even go after expired listings. A lot of the reasons that listings expire is not because of price, it's because no one liked the condition of the property. No one liked the property. They liked it, but didn't love it. But Natasha's team has love money, right? They sell love money, right? It's renovation money. And what it does, it allows them to take the house they like and turn it into the home that they're going to love. As a realtor, you should know your buyer's renovation appetite. Do they want a little bit of renovation, a lot of renovation, or no renovation? Because if you don't know that, you might be showing the wrong price range. Because if they're only qualified for $400,000 and they want to renovate, you may have to show them something less in order to roll those renovations right into their new loan. Natasha's team has tons of marketing to help you market your homes. Yard signs, flyers, and we're here to help. I'm going to turn it over now back to Natasha and or Sherry, and you guys can take it from here. Thanks for having me.
Awesome, Joe. Guys, talk about all of that information. So I know normally I come on and I do my own presentations, but I wanted you to hear a different voice. And Joe did that really fast. Joe has a very long presentation. So I wanted you guys to be able to kind of hear all the programs that we offer from a different voice. Now I want to introduce to you for the very first time, because you guys, if you've worked with me in the past, you probably have met Sherry. Sherry has been on my team for a very long time, and she is the person that is going through, that's the prior slide, Joe. She's the person that is going to meet with you at the end and all of that good stuff, and not at the end, but once you go under contract. So I won't spill all her tea. I'm going to bring Miss Sherry Tedesco on so she can tell you who she is and what she does for my team, and you can put a face with a voice for those of you who have already worked with her.
Thanks, Natasha. So my name is Sherry Tedesco, and I've been doing renovation loans for 23 years. My job is to hold your hand through the whole process. Before you find a property, if you have any questions, I'm here to answer them for you. I'm going to be with you the whole step of the way. You're never going to be alone. So some of the things we do on the pre-contract preparation. You want to start asking family, friends, do you have realtors that you like? Or I'm sorry, realtors, contractors that you like? Start doing your prep work so you have a contractor or a few of them lined up that you're comfortable with. You don't want to go under contract and then start looking for a contractor because it could take a couple weeks to find one, and this is what delays your closing. So when I moved to Florida, I actually had a contractor go through the house with me before I put an offer in. Like, we walked through and I was like, okay, the hot water heater's gone. What would that cost? And everything. Because before I made my offer, I wanted to know what I was getting into with the property. So that's what you want to do. You also want to work with Natasha's team, get all your documents in so that we can pretty much see if we can get you approved and what your budget is. We don't want to have you get into this process and all of a sudden we get your pay stubs and we realize you don't qualify. So getting your documents to us early is going to make it much smoother for you before you start putting money out. Okay, then when you go under contract, I'm going to hold your hand through the whole process. I'm going to keep you on track. I'm going to be like, okay, I need your contractor's bid. I'll work with your contractor to get it so that you can work on your job, because we want you to keep your job to pay your mortgage. So I'll take as much off as I can with the contractor piece. Then what we're going to do is I'm going to do a validation. I'm going to send out paperwork to the contractor to fill. I'm going to check his insurance, his run with the Secretary of State that he is current. I'll look at his license. I'll get all the paperwork with the contractor, send it into our validation team, and we do a background check on him just to make sure that he's, you know, doesn't have a bunch of fraudulent stuff showing up on his record or anything. And also the contractor, if you're looking at like $100,000 job, you want to make sure that your contractor has references of $100,000 job. Our job is not there to make sure that the contractor grows his business. Our job is to protect you, that you're not getting a contractor that is taking on a job that he's going to walk halfway through. So there's a lot of things in the contractor validation, and I'll work on that behind the scenes with the contractor. The other thing is, once the appraisal comes in, when we get the bid and we order the appraisal, if there's any reason that the appraisal doesn't work, the numbers aren't right, something like that, I will work with you to trim the fat, and we'll look at the bid and see if there's some things you can do at a later time. I'm very good at thinking out of the box on these bids to see how to make this work where you're happy. And then we'll get the loan to closing, and hopefully you'll have a happy experience. If not, just always reach out to us and let us know. I think you will. We're going to pretty much make it a smooth deal, and it's not as scary as people will tell you.
Awesome. Well, thank you, Sherry. And I know I didn't say this in the beginning of the process, but now we're going to kind of go into, if you guys have any questions and any questions for us. Sherry did mention about gathering your documents. So the way I work is our system, we do have a loan application. You will complete that loan application, or your client will complete that loan application, and our system is going to pull what's called a soft pull. I, at that time, will collect all your basic documents, and I will let you know what we have to offer without pulling your credit. If you're interested in moving forward, then of course we will pull your credit and issue that pre-approval. Why is it that process? Because when we get your actual hard pull on your credit, it's good for 120 days. And what happens on the soft pull is if we wait and something goes wrong and we issued a pre-approval that way, now we have to go back to the seller to tell them why we can't close because something came up. So we do a very thorough pre-underwrite. We pull back underwriter reports and things like that. And it's very important. And the reason why that is important, because when you see your listing agents, REO agents, such as Ryan Smith or James Matz, these listing agents that always get the good hot listings, well, I can't tell them, I'm sorry, I didn't do my job. So now you have to go through and get all the bank signatures again. So it is my responsibility to make sure I do a full underwrite. So generally, if you're an agent and you've seen my pre-approval, we have taken that client through that process. And clients, we're not being mean when we say, hey, we do have to pull credit. The reason we're doing that is because we have to make sure that your underwriting process starts with pre-approval and not with contract, right? We're closing renovation loans in 37 days or less. How? Because we are pre-underwriting your file from the beginning. We are having those conversations with you up front. The hardest part of a renovation loan is finding a contractor. That is the hardest part. So in our pre-approval process, I am going to tell you to call 7 contractors. Only 5 will call you back when you're ready. 3 might show up, but at least get them in your Rolodex, because if you're going to make the commitment to do construction, you have to have the contractor. The biggest delay is people do not find their contractor until they go under contract, and that is not what you want to do. So with that being said, the contractor is the key to your timeline moving quickly. You're already going to be pre-underwriting. So as soon as you go under contract, you're going to meet Sherry. She's going to introduce you to a consultant if that is required in your transaction. And then from there, you're going to be working to get those numbers. We'd love to get them in 7 days, but I feel like if you can get them in that 2.5 week time, we can still make that 37-day mark. And that's your final contractor number. So does anyone have any questions as it relates to anything you heard today? Any questions that can help you with this program and things like that? No questions? Not everyone at once. We broke it all down for you in the slides.
Mhm.
Yep, I'm good. I just want the slides.
You just want the slides? Okay, we'll definitely get those slides over to everyone that registered. But yes, if you guys have any questions, you can let us know. If not, then we'll be here for you to assist you with clients, or if you are a client, to assist you through that pre-approval process. And we're going to be having these Zooms weekly. So next week, I actually have the renovation room. Mr. Russell himself will be joining us, and he will be going over how to find a contractor. So that way we can drop some gems for you there. All contractors are not good contractors. So even when you go to the renovation room, if someone refers you, you still have to do your due diligence. As a lender, I'm not allowed to refer you a contractor. However, you can get referrals from your realtor or third-party people, your third-party people in the transaction as well. I personally can't refer you a contractor, but I am going to be bringing him on so he can teach you the questions to ask contractors, and you can maybe utilize him as a contractor referral source. But we just want to kind of start bringing people to you so that way you don't have to generally go out there by yourself in the big world to try to figure out where to start, right? But you still have to do that research. I did have a question. When did you collect the data for you said when did you collect the data for the slideshow? Was that a question, Ameka? Are you
Yes,
talking about the percentages of Joe Daly's presentation about how old our homes are in Chicago?
T. Kelly asked that question in the chat, so you can feel free to unmute and clarify.
Got you. I think that's data, right, Joe? You just pulled data to figure out those the cost of sold homes. We do our
Yeah.
own data.
I
Yeah.
wanted to know if it was pre-COVID or after COVID. When did you collect the data?
Good question.
How current is it? Because everything looks amazing and
Yeah.
wonderful. I just want to make
Yeah.
sure that what was the time period?
Yeah, the data was collected in the last 6 months for sure. But then again, I don't know how often they update their records on that website. So it may have it, within individual cities. I pulled the MSA of Chicago itself. So if you wanted to view it yourself, you can just go into neighborhoodscout.com, www.neighborhoodscout, all one word.com. And then you can pull up Chicago, and then you look at the data. Could the data have changed? Maybe a little bit, but I would say I pulled it in the last 6 months.
All right, thank you, Joe. Thank you.
Mhm.
Natasha, I've got a question. Can you hear me?
Yes, ma'am.
So if you already live in a home, which I do, I have an FHA mortgage. can you just get the streamlined 35,000 just to do like cosmetic stuff in the house?
Yes, so you can do that. Now, I always tell my clients, because I love all business, but I'm sure if your house, you already live in it, you probably have a lower interest rate than what's available today.
I do.
So if you have the ability to get a line of credit with your local bank and you don't need tomorrow's value today in order to do the work, then you can just go and get a line of credit. But if the repairs that you're gonna make is gonna bring you more value, then yes, we can do a refinance on your existing home. And we could do that as the just general work, like you said, under 30,000. And we can also do it, as Joe mentioned, to add additions to your home and things like that.
So you would have to refinance the first mortgage.
Correct. So we would
Okay.
have to pay off your existing first.
I got you. Okay.
So yeah, so
Okay.
you always want to start with your current equity. And then if you need tomorrow's value, then you would utilize the renovation loan.
Okay. All right. Thanks. Okay.
Thanks for your question. Awesome. Well, if you guys don't have any more questions, we'll pretty much wrap it up. And like I said, we're going to have another one next week, same time. So you'll get the flyer for that. And we're working on actually bringing a live renovation event to you guys soon as well. So keep me on your radar for new events and education as it relates to renovation loans. And I will see you guys next time.
Thanks, Natasha. Thanks for having me.
Thank you guys. Have a great day.
Thank you.
Thanks.
Bye-bye.